Good morning, members, officers, and any members of the public who are viewing the live stream of this meeting. Welcome to this meeting of the Audit and Corporate Governance Committee. My name is Councillor Michael Atkins. I am the chair of this committee. My vice chair is Councillor Peter Samford. I'll introduce other attendees when I invite them to speak. If you're in the chamber, you're reminded that you are being live streamed. Can I ask, if you're joining us remotely, please ensure your camera and microphone remain off unless you're addressing the committee. If you're present in the room, please ensure your microphone is close to you and speak clearly when addressing the room. Item 1 of our agenda today is apologies. Pippa, are there any apologies for absence, please? Oh, sorry. Well, Aaron, thank you.
Apologies, Chair. We have two apologies for absence today, one from Councillor Richard Stobar and one from Councillor Susan van der Ven, who is attending remotely.
Thank you. Item 2, declarations of interest. Do any members have interest to declare in relation to any item of business on today's agenda? Whoever becomes apparent later, please raise it then. I'll take Councillor Leeming and then Councillor Samford.
Thank you, Chair. So I'm a town councillor for Camborne Town Council, and there are sections in the Treasury report that refer to a loan. Thank you.
Thank you. Councillor Samford.
Just my usual declaration as a non-remunerated Director of Ermine Street Housing. Copy and paste from previous minutes, please.
Thank you very much. Any other declarations at this stage? Thank you. Item 3, minutes of the previous meeting. Do members have any suggested amendments relating to the accuracy of the minutes for our previous meeting held on the 10th of July? Councillor Williams.
It was just in declarations of interest on page 5 that Camborne is a town. It said interest as a parish councillor for Camborne Town Council, but I think it's a town councillor. Correct me if I'm wrong. Yeah. So I thought, and Camborne has done a lot to get to a town, so hell hath no fury and all that. We must make sure that's correct.
Thank you. Yes, if we can amend that, please. Any other amendments for the minutes? Thank you. I'd like to move approval of these minutes as a true and accurate record. Are you happy to second? Thank you. Can I take that by affirmation? Thank you. Item 4 is public questions. No public questions have been received today. So we move on to our first substantive item 5, an audit update from our external auditors, KPMG. Please can Andrew Cardoza and Emma Malcolm present their report. Thank you.
Sure. Thank you, Chair. So first, apologies, I'm here again. I know I said goodbye last time, but I didn't realise that we would have a report that we could bring to you. So the fact that we can, I thought, well, I might as well come along with Emma and introduce Emma Malcolm, who's going to be your new partner in charge of the audit, taking over from me. And Emma will tell you about herself in a minute. So yeah, so it was just to update you as to where we are with the audit. We've been through it with Fazana and the team in terms of the progress we've made so far. And then we'll take you through the plan and the VFM work that we've done. So as a high-level summary, we've nearly completed provisions and payroll, which is there's something that's good. The significant part of those two areas have been completed. Still in progress in terms of the areas are investment, cash and borrowing, and some of the income and expenditures. So we're still carrying out that work, and we've been through that in terms of where we are in terms of the audit. The things that we haven't started is journals, debtors, creditors, PPE, property, plant and equipment, capital, investment properties, and other lines of the income and expenditure. So there's still quite a lot of work to be done. Been on site for quite a long time as well. So in terms of the actual work that we've been able to undertake, it's not quite as much as we wanted, to say the least. There's still quite a lot of work to be done. Still quite a lot of areas to be audited. We had completed all our planning, like I said last time when I came and presented to you, so that was good news. The fact that you produced your accounts by the deadline, that was good news. The thing that's taken a lot of time is the evidence that goes behind those accounts and us auditing that and being satisfied that what we've been given is sufficient and robust information. So we're still going through all of that. I've got all the detail behind that if you wanted to go through that, but I don't think it's necessary right now. But that's just a high-level summary of where we are. Happy to take questions in terms of the progress of the audit before we come to the plan.
Thank you, Mr. Cardozo. I would anticipate that members of the committee will want to delve into, as it's a kind of,
Yeah.
we're in the middle of a live audit. I think if we could spend a bit of time on this, I think that would be appreciated. I can see Councillor Leeming would like to come in with a question.
So I'm just wondering whether you are anticipating any overruns at this point. And I don't know whether this is the right point to ask you these questions, but in your report, it's page 13 of your report, page 23 of our report. Are you happy for me to look at, to ask some of the questions about those things in there at this point? Thank you. So yeah, overruns first of all, and then I have a couple of questions about your audit risks and approach. The first one is on page 13 of your report, 23 of ours, and it's to do with the adoption of IFRS 16 and leases. So my first question is, how many leases do we have? Where are our leases? I mean, it's possibly a question for Fazana as well. I'm trying to understand the scale of what that actually is, and how much work is underpinning that outstanding section, because there's a bit in your commentary that said that we're running behind on preparing those things. So perhaps if I just stop there, but I do have a second question after that. Thank you.
So, in terms of overruns, we are getting into the realms of overruns now. We weren't when we were planning and carrying out our planning and risk assessment work. There was no overruns at that point, which was good. And again, compared to last year where there was £50,000 of overruns at that point, that was really good place to be. We, as I said, to get to this place now, we have used up much of our resource that we wanted and we'd booked in, that we thought we'd have completed much more of the audit. So now we are coming back into the realms of booking additional time and additional staff. The fact that we have the staff that have worked on the audit is fantastic, and we're able to keep some of those. But at some point, we're going to run out of those people because they're going to be pulled onto other audits that they're booked onto. Jesh and Shania know South Cambridgeshire, know your accountants really well, and they've worked with you for last year and this year. So that does save a lot of time because they know what they're doing. When we have to bring new people in, they're going to have to start not from scratch, but we'll have to learn more. And again, that's part of the additional cost as well. Emma, do you want to pick up?
Yeah. Hello committee. So just before I answer the question, so I'm Emma Larkham. So as Andy said, I'll be taking over and signing this year's accounts. Just very quickly, I'm based in our Cambridge office, so just down the road. So nice and local, and I've got a big presence in the local government team, sort of lead our sort of part of our national practice, and sort of do a number of audits locally. So hopefully good start. So in response to IFRS 16, so this is the new auditing standard that comes in for this year. So this is additional work that we will need to undertake this year. I can't currently give you any response in terms of the number of leases. We haven't yet seen any of the disclosures or work underpinning that leases. So that is something that the council still need to work through and provide us with. At which point we will be able to assess how much, is it material, how much work do we need to do. But that it is a task that needs to be completed, so we're not quite there yet to be able to give a response there.
Thank you. Actually, just to stand back from all of this, I wanted to say hello, welcome, and thank you, Mr. Cardozo, for all your work over the last bit of time. It's been a pleasure to work with you. You've been very candid and straightforward, so thank you very much. Okay, so I suppose my question in response to the overrun situation is, what can we do as an audit committee to help with this? Is there anything that we can do to make things better? And then my second question is actually, it's another thing on this list of approaches. It's the recoverability of investments. You flag this as a risk about disclosure of our investments. I wonder whether that's something you would like to expand on a little bit more. What are your concerns? Is it to do with misclassification? Is it to do with not having the correct evidence to say what they are? I would like to understand what that means, please. Thank you.
So, in terms of your first question, it is a case of just keeping aware of it, and as a committee, obviously working with Fazana and her team, one of the big issues for us is the capital piece of work, which is outstanding and was one of the things that took a lot of time last year, and again due to sickness. That's always an issue where you have one person. If you have one person off sick, and if they're responsible for that, then that does cause an issue. That's still the case, and I think Fazana, can speak for herself, but that you are doing something about that in terms of trying to give that responsibility out to more people, but they have to reach, they have to learn it, they have to come up to speed, etc., and then provide us with the information that that person has readily to hand, I suppose, but they're off sick, so we can't ask them. That does cause an issue when you've got that one person and the kind of London omnibus kind of scenario. That's never where you want to be as an organisation ever, and you have to do something about that. You have to build in resilience and the ability for other people to step in when something goes off, because you can't have that single point of failure. That's the worst place to be. So yeah, so working as a committee, making sure that the accountants have the resources that they need to fulfil their tasks, and whether that's financial or person resources, then that will be useful. In terms of investment properties, again, we're where we were last year, really, in terms of actually making sure that those properties are valued, those properties are correctly accounted for, and all of the evidence that sits behind the valuations we have, and we've not seen that. So again, that's the piece that we're working with Fazana and the team with. So the problem there would be that if we came to a point in time when we just say we haven't got enough evidence, do we just disclaim it? And that's the nightmare scenario for you and us, because that's a large amount of money.
I think so. Yeah, Fazana, you wanted to come in there?
Thank you, Chair. Just to reiterate on Mr. Cardozo's point, it's not a single point of failure. We have built resilience in the team, but there has to be that understanding that the training that has occurred over the last 6-7 months, it is year one of training. You couldn't expect someone to have the same knowledge of somebody who has been working on a system for 5-6 years. So there has been an improvement from the previous year, and we are working through some of those capital queries, but it is obviously going to take a bit of time, and there will be obviously more resilience built in over time. It's not going to happen overnight.
Thank you. Just before I come to Councillor Williams, can I just understand on the investment properties front? We would, I imagine, have had those valued by external advisors. So what is it the evidence flow from those external advisors to yourselves that has not taken place as you would expect?
Yeah, we've just not had that just yet, and that's what we're waiting for.
Understood. Are there any other examples where there are significant items in the accounts where the council will have relied on external advice or valuation, where that communication is also not where it needs to be at the moment? I'm thinking, well, obviously, pensions would be another classic case. Other items of valuation.
We've had the initial queries in terms of the main valuations for the PPE. We've got questions on that, and again, part of that would be about talking to the capital accountant and making sure that we can go through all of those. So whilst we've had information, it's just information now. It's not evidence that we can rely on, because we've still to test it. Until we can test it, until we can be satisfied, it is just information for now. Yeah.
Thank you. Councillor Williams, you wanted to come in.
Thank you. I've got a series of questions. So, Chair, do you want me to sort of do a few and then pause and then do the rest?
Yes, I was hoping to focus as much as possible on the kind of current state of the audit and then return to the rest of the report after that. Does that help at all? I mean, I could ask, with this, I mean, we could go through the rest of, ask Mr. Cardo to present the rest of the report and then come to you for all your questions with that.
Yeah, I think there's some crossover, because the fees, obviously, we're going to keep coming back to that, which is a little bit later on, if you're happy with that.
Yeah, well, should we present the rest of the report then and then take all your questions? Or?
Okay, if there's one question,
yeah, go for it.
If I can ask first, and then after the rest of the report, I'll ask questions throughout. I appreciate I've asked this prior to the meeting, but just for public record, can we have it confirmed that this is, although it says draft, it's not draft, and given the duplication that we have on pages 49 and 50 of our report, but also the page numbers jump around in your reporting. So we go from sort of 31, I'm just going to find the numbers exactly, 31 to, it's 40. So yes, there's sort of 9 pages missing, and 31 and 40 are the exact same page. So just clarification that it's not draft and that there aren't things missing.
Yeah, I'll pick that up. Apologies for that, Councillor. Well spotted as always. But yeah, it's not meant to be a draft. It's meant to be the final report that comes to you. We will correct that and we will reissue it on the page numbers. Yeah, and there isn't anything. The appendices, which is where this has occurred. There's a series of template slides that go into lots of different local authority accounts reports. The ones that we've taken out were the ones that are not relevant to South Cambridgeshire. So you're not missing anything that should be here for South Cambridgeshire.
Thank you.
Thank you for that clarification. Do you want to take us through kind of any particular points of interest in the rest of the report you think we should be aware of, and then we'll might take some more questions? Thank you.
Thank you, Chair. So I think I'm right in saying that you've seen this report in draft before. So the substance of the report in terms of the audit risks haven't changed. There's the key things that have been updated. So materiality, we've just updated based on the draft accounts. The key risks are significant risk and other rather risk areas, which are set out on page 6 of my document or page 16 of the pack, are all as you've seen before. So just at the high level, so our significant risk areas, so those areas where we see the heightened level of audit risk are around the valuation of our land and buildings, valuation of the investment properties, both of those because there is high degrees of sort of estimation and judgment involved in those valuation processes. The management override of control, which is the risk you see on every audit, which is sort of in recognition of the fact that management, if they so wished, were in that unique position to manipulate the accounts, if so that's sort of focused on journal controls and key other estimates. The valuation of pensions, so again, that's because of the level of sort of estimation and judgment involved in that. And then we also have our expenditure recognition risk there as well. And the other areas, so whilst not deemed significant risk areas, those other areas which we deem to be important that we report back to the committee for this year. So one is the preparation of the group accounts, recognising that there has been some challenges in that, and also that you have got to prepare those, and you've got some large components sitting here. The adoption of IFRS 16, which we've touched on already, so that is that new accounting standard coming in for this year, and the recovery of the investments in some of those subsidiaries, so making sure that they have been appropriately disclosed in terms of valuation and also completeness. So I won't go into obviously the detail of how we're going to test those is all set out in the report. But the other thing, sort of the new key part of the report that you're seeing today is our risk assessment on value for money. So this is coming much earlier than what you probably have seen the previous year, and sets out our initial assessment of value, sort of the arrangements in place to secure value for money across the authority. So just for memory, for the sort of completeness of the committee, value for money, we look at 3 areas. So we look at financial sustainability, and this is around the arrangements in place to secure financial sustainability, so looking at budget arrangements, reserves positions, etc. We haven't found any risk areas in that domain as it stands today. We then look at governance, so that is considering your arrangements in place to secure good governance, so how key decisions are made, looking at the key processes in terms of oversight and challenge across the organisation. And then the third domain is around improving economy, efficiency and effectiveness, so how are you utilising your funds as best as possible? Are they being overseen, or have you got the right processes in place? So we did have identified currently a significant risk, so that means an area that we want to pay some additional focus and attention to, so we'll do some additional work on. So one is in relation to the arrangements in terms of the publication of the financial statements, and this was an area of weakness last year, and we absolutely recognise that the accounts were published in line with the deadline this year. However, I think think we're on version 3 of the draft accounts in terms of our process so far. So there is still some work to be done in terms of that process, which absolutely acknowledge that we're on a journey, but we'll just do some work in terms of considering what that means in relation to any significant weaknesses. And the other area, again, similar to where you were, so we reported last year in terms of weakness, is just around sort of the monitoring oversight of your investments in other entities. So to make sure that there is that good governance, that good oversight and challenge, particularly around recoverability and understanding how that flows through into your accounts. So the following pages obviously provide that more granular detail, for which happy to have any questions. This will form the basis of the annual audit report, which will come through as an interim annual audit report through to a November audit committee. And then I think the other appendices obviously just updated to show me there, and timetable. We are obviously, Andy's talked through how that timetable might need to shift now in terms of where we are in the preparation of the accounts for this year. We've touched on fees. And then I suppose the other key one just to note there is on page 33, which is just to confirm our independence to you as your auditors. So that's just a bit of a whistle-stop tour, but happy to have the questions now. Thank you.
Thank you. So I'll come to Councillor Williams and then any further questions from the rest of the committee. Thank you.
Thank you, Chair. Shall I do a couple and then a pause and then do the others after? Yeah. Okay, so first of all, page 13 of our agenda packs, page 3 of your report. When it comes to the quality of the accounts, it says a number of manual adjustments. Now, a number can be quite a range of issues. So I appreciate you might not know the exact number, but can we have some sort of scale so we know the scale of the problem? So that would be my first question. And also on this page, you say significant delays due to unavailability of staff. That might be because we're reliant on third party when it comes to property, plant and equipment. But if we could understand why. And then on this same, on page 23, your 13, it says training needs for new and existing staff. If we could just maybe understand or have agreed to, I appreciate there might be perhaps subsequent work for us to look at as a committee to see what training is in place, and perhaps that's something we can take away and look at another time. And I'll just do this last question, then I'll pause because I think I'm about halfway. Page 31 of our reports, 21 of yours. I was very interested to see when it said about the lack of monitoring over investments, because that's something that I've raised at committee for feels like years, possibly years. We have an investment strategy that gets adopted every year by full council, but that sort of monitoring and reviewing of the individual investments, I've never felt that we don't do what we used to at the very start, which was we would then have sort of a retrospective scrutiny, essentially, of audit. So what happened with the first couple of investments, or perhaps maybe only the first one, was that it was approved through council, but then I think it was about 3 or 4 months later it came to audit corporate governance to sort of see how it was going. So you had that pre and post, which I thought was really helpful because, like everything in finance, there is an element of crystal ball glazing that has to go on with investments and the like. I'm just wondering whether you think, is that what you're referring to, that there should be some sort of post-scrutiny of investments, as was the case once? I mean, I am going back to 2018, I think, when I say that. Or is it something else? Thank you, Chair.
Thank you. You happy to take a first stab at those questions?
Yes, certainly. So in terms of the first one, so that summary around the backstop position on page 3, those sort of number of manual adjustments and the sort of delays, that's in referring to last year's. So we are obviously seeing similar challenges this year in terms of some of the delays, particularly around PPE, so as we've just touched on in terms of some of the capacity within the team to answer those questions. I think there are still a few manual adjustments happening, but I think that's come down from where we were last year. We're still just working through those. So that's really the summary of last year to sort of set out where we are on the backstop journey.
Yeah, please.
I appreciate that, but what I'm looking for is sort of scale. Are we talking about 3 or 4, or are we talking about 300 or 400?
Sorry, Suzanne, did you want to come in on that point?
So when the draft accounts were issued, there were no manual journals. The TB and the draft statement accounts married. So we completely moved away from having any manual journals compared to 23-24. Recently, there's been an identification of a mapping issue in one of the notes, and we have done some manual journals to ensure that that feeds through the statement properly, and those journals would be processed as part of the final adjustments, which is how we would normally work. So there's not hundreds, there are only a few.
Thank you. Scale is very important, I think.
So I think that was that one. So then if we then went on to, so the next question was on the IFRS 16 slide, wasn't it, in terms of the training needs for new and existing staff. So that's essentially, again, in recognition of that this is a new standard. It is one that some authorities have found challenging, and that work, I think, is still ongoing in terms of the completion of all of that work. So I don't know, update.
So in response to that, we have had some training on IFRS 16. It is a challenging one, as the auditors have explained. We have worked with neighbouring authorities, and most authorities are in a similar position. I think there's been very few that have managed to sort of conclude on that. It's a big piece of work. We did start that piece of work. We have identified, I think, around about 5 leases that fall under that category, but we have not managed to process those journals.
And then the last one, which I think was on the value for money, so on page 21. So this is around looking at, as you say, the consideration. So you've got particularly large investment in some of your subsidiaries. So how are you comfortable that there is oversight over the investment that's happening at those entities? So in terms of how that organisation is run, are you happy that you're likely to get the recovery of that investment over time? How have you got the oversight? So we obviously, this is our risk assessment, so this is the area where we're saying we need to do some more work in to understand what arrangements there are in place there, and whether they do need to be strengthened. But I think I'm right in saying that this was something we pulled out last year as well, so sort of checking on that sort of progress.
Thank you. Do you want to take us through the rest of your questions, please?
Yes, and I would just say I think an item that's an area that, because it has come up several years back to back, would be good for us to just have an idea of how we're going to resolve that. And as members, I think there are ways that we can do it, and it might be that we look to what we did previously to address that. On page 35 of our agenda and 25 of yours, we're still having that risk assessment about significant risk associated with governance in relation to accounts preparation. But actually, a lot of the report is quite positive around our governance arrangements. So when we look at governance, I'm just trying to get a balance of, is this sort of internal and officers, or is it the governance of members? Because obviously if it's member governance, we can have a lot more input and a lot more, sort of involvement in that. If it's officers, then that's trickier for us as a committee to deal with. Then on page 38 of our agenda, 28 of yours, on the summary of the risk, it says, towards the end of the financial year, the council identified a shortfall of cash, which required the council to obtain a new £20 million loan. And it says there's going to be more work done on that. So I'm just wondering when we might see that, but also we only borrow for investment purposes and capital purposes. We don't borrow for revenue. So where it says shortfall of cash, that kind of implied that we were having to top it up through essential borrowing rather than it might be a cash management situation. And also to seek reassurance that, because we did have a big cash flow liquidity issue at the start of COVID, obviously, when we did get into some, I think, legal difficulties at times. So just to reassure that we are still keeping that liquidity in place to make sure we don't go back to that situation. And then nearly there, Chair, page 42, page 32 of yours, it says, this goes back to fees. we've already heard that there are going to be overruns coming. Again, I come back to the scale. What is the scale of the problem? Because, are we looking at a forecast of tens of thousands, or like we've had in the past, hundreds of thousands? And you said about a disclaimed audit would be large. I'm afraid I'm going to try and push you to, again, a bit of a scale, because large is very open to interpretation. Some sort of, because we really need to know when it comes to forecasting what we're looking at. And lastly, but by no means least, page 47 of our agenda, 29 of your agenda. In relation to IT governance concerns, and I have to say a lot of work was done on this sort of 2019, 2020. I believe Councillor Brian Milnes was heavily involved, because obviously our IT is a shared service. But in light of the current climate, I can understand as well why IT is, but as members, we don't have really much oversight at all. It's very much an officer-driven thing with the shared service. So reading through this, it kind of had a suggestion that there needs to be a bit more oversight. We need to be more au fait with that. Again, is that members or officers? I think it's a question there.
So I think the first question was on the governance of the accounts prep. So this is around the processes in place to ensure that you have a set of accounts which are fully code compliant in line with the deadline. So yes, there's a high degree of that which is officer led, but equally as a committee, you need to ensure that there are appropriate resources, capacity, capabilities within that team to enable that to happen. So that's your oversight that we would look at from that perspective. That's why it sort of fall under that governance domain. It is a council obviously responsibility to ensure that they are in line with that deadline. I think I'm right in saying the second one, just in terms of the loan piece. So I think I'm right, and Fazana, tell me if I've got this wrong, but you've made an additional investment into one of your subsidiaries during the year. Therefore, later on, you had some cash flow challenges and you've had to have some additional loan. So we just want to understand sort of the process of what that's happened for, making sure that is all capital, as you say, purposes. So that's why we're drawing that out. That isn't something we have concluded on yet. We need to work through that, and we'll do that over the coming months before, obviously, the backstop deadline. And then, was it then fees? Fees. So I think I have to say, as I sit here today, I can't give you an answer on that. We haven't. So if we work through those areas of additional fees, IFRS 16, we haven't had that information. So I can't tell you how much that work that's going to take. The fee variations, as Andy's given you that update, we are not where we needed to be. There is still quite a high degree of work that needs to be completed to try and get us to a place where we'll have done the majority of the work for the 24-25 position. Again, until we get that information through, that's difficult to gauge. The disclaimed opinion, again, that sort of is dependent on how far we get through the 24-25 work. So the level of disclaimer. So if we start having to say, well, we've got to disclaim part of the audit or everything, or like that, then gets more complicated. I would say, you've got 12k was the cost of that from the last year. I would use that as a bit of a proxy. And the VFM significant risks, we've pulled out 2 there already. I would say it's normally, you've got 5k for 1 last year, so again, use that as a bit of a proxy. It's not going to be a small overrun. I would hope it will be less than the one that we got to last year, because we got through all of the planning in a much better state. But really, until we start working through this and getting that information, it's quite difficult for me to say and put a quantity on it. The other thing we haven't touched on here, which is, I think, important just to draw the committee's attention to, is the building back assurance work. Ideally, we would do some of that work this year, which comes at an additional cost, but I think we do need to take a view on that, given where we are in the audit, as to whether that's the priority for this year. Oh, IT, sorry, yes, thank you. So IT governance, yes, absolutely, this is something that I would be expecting the committee to have some oversight of. So in terms of, again, the governance around your IT. So actually, yes, it's all done by a service organisation, but actually what are the arrangements in place? Are there any issues? What's your cyber, is there cyber risks? how does that come through? You should still be getting some reporting through to you as a committee, I think.
Yes, Councillor Williams.
Thank you for that. I think what would be really, and I understand, I say when it comes to loan, because obviously the investment, it says very clearly it was 19 million and the loan was 20 million. So it's not a like for like, and £1 million is a lot of money. What I think would be really helpful is, we have these reports and they come each time. It's actually maybe a list of recommendations for us as a committee of things. Because saying like we need improvements around IT governance or these sorts of things, I don't disagree, but the devil is normally in the detail. It's how, because equally we don't want to sort of go down a certain line, try to improve it, and then find it's not actually what you're meaning or what you're looking for. I'm not saying, Chair, that we commit to adopting everything, but I think we're at the stage now where we're in a place where we can start looking at more things, but I think it would be useful to get a steer, a wish list, as it were, or some good practice that we can then, as a committee, look at and review and see, what's feasible, what's practical, admittedly, but where we can try and add that more value, and particularly around the IT governance. I think that's something that members would very much welcome, but it's normally been dealt with by scrutiny rather than this committee before, and perhaps that's a conversation we need to have or look at our terms of reference. But is that something, Chair, that you'd be, if the external auditors are willing to sort of provide us, you feel would be helpful?
Yeah, I mean, I'm always happy to receive suggestions as to how the committee can better serve both the audit and the council. So I think if there are recommendations specifically for audit committee, we'd be happy to receive those. Like you say, no guarantee necessarily that we would adopt all recommendations as you'd expect, but I think that's a helpful suggestion. Thank you. Is there anything else you wanted to say on any of those points, Councillor Williams? Because I think
no, only my usual longing for not having to spend lots of money, with the greatest respect, on things that don't actually deliver anything for residents.
Understood. Fazano, I think you wanted to come in on some of those points as well.
I just wanted to come on the point about the investments. The 20 million and 19 million is a bit of a coincidence. The 20 million investment into our subsidiary is part of the capital programme, which is approved by Cabinet Council. We do have a robust treasury management strategy about sort of like the minimum and maximum requirements. We have a monthly meeting to talk about the cash flow outlook. So it's not that we just ran out of cash and we had to borrow. It is planned. It's planned borrowing. We have regular meetings with our treasury advisors, and we borrow. We don't borrow unless there's a need, and as KPMG have said, they have not concluded on their work on investments just yet.
Thank you. Can I just pick up the point around the recoverability of investments, because I agree this is something that I think has been flagged to us several times. I'm afraid I'm struggling now to find where the reference is, but I think it concerns the investment in Ermine Street housing in particular. I think you identified that there is now, the council has introduced more kind of formal arrangements as to how that kind of govern that relationship. So presumably that's an improvement on where we were before. But I think there was a reference that there's still no planned, there isn't a kind of identified repayment plan of the capital investment. Would you normally expect to see a repayment plan for an investment of this type at a local authority? I'm just sort of thinking through the actual mechanics of it, where you've got a wholly owned subsidiary which is delivering social housing. Clearly it's using that money to build the social housing. Then it's deriving rental income from those, a decent chunk of which is being returned to the council in the form of the interest payments on the money that it's loaned in. So that bit I understand. But in order to achieve sort of repayment of the principal, it would either have to, the council would have to sell its stake to an outside advisor, or we would have to sell off the housing that has been built. So I feel like I'm missing a piece of this somewhere. Perhaps you can help me.
No, understood, Chair. I mean, from our point of view, the concern that we had was, A, that we couldn't find anything that said that you had lent this money, that there was an agreement in place, etc. So that's where our first kind of audit scepticism came in, and the requirement for that to be done as urgent, as an urgent matter. Following on from that, yes, I would expect an agreement in place and a plan in place to show how that money would flow back to the council eventually. Absolutely agree that In a normal scenario, if you were building the houses yourself and this was a council-owned asset, you wouldn't expect that repayment plan. This is an organisation that you're lending money to build those houses. You're lending that money. You have to have a plan in place that says that they agree and you agree that timescale and how it's paid back over time, whether that's through the rent that they get in, that they are paying down the principal plus interest. That's what I'd like to see, and it's something that I do see at all other bodies that I work with.
Yes, Councillor Sanford.
Yeah, from the perspective of Ermine Street, this was discussed at the last board meeting. And by the way, Ermine Street doesn't build houses. It acquires market rate houses on the open market, which it currently has about 500. And we did discuss the nuclear situation, that if Unitary Authority decides to get out of that business, what would be the impact on dumping 500 houses at the same time on the open market? We have a property leasing specialist on the board who cautioned against that. Let's just say the discussions are ongoing, and I'm sure Duncan Vesey, who leads on Ermine Street, will be happy to talk to you if you haven't talked to him already. So yeah, it's recognised as an issue from the Ermine Street end. I can't speak to the council end.
Okay, thank you. That's helpful. Councillor Williams.
Can I just say as well, I think we do, while governance arrangements need to be up, as great as they can be, I think we also do need to bear in mind that the council is the owner of Ermine Street. It's not like, it is a third party from sort of an accounting point of view, but it is owned by us and is within the control of South Cambs District Council. They are the only owner.
Thank you. Yes, no, that is a helpful clarification. Councillor Leeming, please.
Thank you. So following on from that point, I understand the situation with Skip is different. So we're not the only owner of Skip. And I wondered whether you had any comments on our governance arrangements around that particular partnership. Because as I understand, that's a 50-50 partnership with Hills. We're not the sole owner. We're involved with an entirely private company. So is it actually the case that we don't have a schedule of repayments even with this partially owned subsidiary?
I can't remember the top of my head, Councillor, sorry on that. Do you know, Fazana, whether there is an agreement in place?
I mean, there is a comment. Yes, I mean, yeah, that's a good point, Councillor Williams. I mean, there are comments in place in our review of the investment strategy, which we'll obviously get to later in this meeting. I think that identifies that repayments are clearly not due to begin until work starts on the housing, because that's when the positive cash flows will start coming into the as and when housing is kind of sold off. But yes, I don't know if anybody that maybe want to clarify after the meeting. Yes, Councillor Williams.
I'm trying to make sure, because Skip was set up, there was two partnerships as well. We have the one with Hill, but also the Balfour Beatty. And Balfour Beatty does often get forgotten, but they were both established and with considerable budgets. I think it was, off the top of my head, 150 million potential capacity in each. At least the way it was on what was voted through, I personally didn't support it, was that although it's sort of classified as a loan, it's more of a sort of profit share post housing, if that makes sense, because Hill have got to put money in. We put not so much money in, but land, which obviously has a value. So I think on that one, it is a very much more complicated scenario, which is why some members were very hesitant towards it. So I think as well, that's why the repayment schedule is not going to be as easy to work out, because like you say, it's dependent on the houses and what they sell for and when they sell and everything else. It's a very complex issue. But I think this in itself actually shows a purpose for why we need more oversight. I know we're going to have the treasury management, but actually on these investments, because also we have the science parks, which which we've borrowed money to buy, which, okay, there's a rental income, but it's got very, very complicated, and there isn't actually much oversight from members in public, I would say. I think, you know, we have appointees to boards and things, but not in public, which is important.
Understood. Councillor Leamy.
Thank you. I would appreciate further open scrutiny of this financial arrangement, just as a general comment. But back to these valuation things again, I was just sitting here thinking, would it be helpful if we, as the Audit Committee, contacted these outstanding valuation people and you know, expressed our concern that their delay in giving the council information is actually holding up the audit and causing problems for all of us. I think if maybe collectively we could just put some pressure on these third parties that are holding us up. I don't know whether that would be helpful.
Thank you. Zana, would you like to come in?
Yeah, sorry, just to clarify, we're not waiting for them to provide information. We have all that information, but due to the sickness and the understanding maybe obviously the senior business partner was perhaps going to come back, that information hasn't been provided. So now we know we've started on plan B basically. So we're not waiting for external providers to provide them. We have all that information, but the audit manager didn't want to start work on PPE at that time. So now we have plan B and we are in discussions with KPMG about the way forward.
Sorry, I misunderstood that. And is that the case for the PPE and the investments, that we've got all the information that we need?
Yes.
For both of those factors, thank you.
Thank you. Are there any final comments or questions from anyone on this item before I'd like to move this on, if possible? Thank you. Thank you to Mr. Cardozo and Ms. Larkham for presenting today. We're very grateful for your attendance as always. Goodbye again, Andrew. I understand it's also been requested that we arrange an additional meeting of the Audit and Corporate Governance Committee towards the end of November to align with the timetable that you've indicated at the end of your report. So I'll be in further communication with all members about that in due course. But thank you again. You are welcome to stay or escape as you wish. We've been asked to note this report and we have done so. Item 6 on our agenda is the Treasury Management Performance Q1 report. I believe we've got Martin Lee and Daniel Hasler to present this report.
Thank you, Chair. Treasury Management Report outlines our activity for the first 3 months of the year. That's April through to June. If we look at performance against the original budget that was set, starting with our cost of borrowing, that's the interest payments on the loans that the council's taken out. The spend is actually around sort of £500,000 lower than what was budgeted. Main reason for that is that in the first quarter our cash balances were higher than we'd anticipated, so there wasn't a need to borrow as we'd sort of forecast in the budget. And actually our overall borrowings dropped by 3 million over those first 3 months. And when we look at the return on our investments, that's the interest we earn on our investments, that was around £500,000 higher than we'd put in the original budget. It's due to a sort of a recurring theme. When we set the original budget, there was always the expectation that the Bank of England were going to be making a series of rate cuts to the base rate over the future months. They have been making cuts, but not with the frequency or at the pace that was originally forecast. So consequently, the rates that we're able to achieve on our money market funds is higher than what we thought we'd be achieving. And also of note, we've actually noticed local authorities who need to borrow actually paying some competitive rates. We often see this towards the end of a financial year when locals need to borrow and the demand for cash can push up rates, but we've actually seen some locals paying competitive rates already in this first quarter, and so we've sort of taken advantage of that. Should point out though, however, in terms of our borrowing, much of the reason why our cash balances were high in the first 3 months than we expected, it was because of slippage on the housing revenue account, new build developments. That's now picked up. We're seeing a lot of activity. So, I mean, for example, the skip just opposite the council buildings, that was up and running from July. And so the HRA has already advanced £5 million in terms of infrastructure spending for the affordable housing that's going to be built there. And we're seeing a lot of spend across other new developments across the district. So there will be borrowing as planned. It's just shifted later in the year. Just want to point out as well, we've added an extra table, so that's at paragraph 32, and that's just outlines the lending we've made to other organisations. So that's where we got a table listing Street Housing, also Skip, the Leisure and Ice Centre and Town Council, and yeah, we're just making a note in terms of whether we're on schedule with terms of repayment of interest and principal. Nothing of concern to note there. And finally, it was pointed out that we'd made an error towards the end of the report. It's paragraph 39 under the options. So it states that the option is not to approve the Treasury Management Report. That was a miswording. It should be that there's an option not to consider and review the report. So I just thank you for pointing that out and just to make that correction.
Thank you very much. Can I just to start, pick up that new table on paragraph 32, which I think is a welcome addition to this report. Just from my understanding, so the loan to Camborne Town Council was, according to the table, repaid in July 2025. So I guess the month after this report, kind of strictly speaking, covers, but you've obviously just included it in there since that's a known thing.
As we knew, I thought that would be
that is appreciated. Thank you. So that will then no longer appear in future editions of this report. Can I just understand the meaning for the Leisure and Ice Centre investment, repayable March and September? Is that the full amount of the principal, or is that there are repayments twice a year for a period of time?
Yeah, so they're actually making payments of principal and interest, but I think, put my glasses on. Yeah, this is actually going to be a long-standing loan, so I think repayment isn't forecast around 2048.
That was my recollection as well. Perhaps I think yes, if we can expand this table a little bit, maybe just to give a few more of these details about. I mean, it is very helpful to see, for instance, that it's on schedule and what that schedule is, but some idea of the kind of length of it and what is and what's covered. But I think it's a good start towards some of the concerns in the committee. Thank you. Are there any questions from other members of the committee on this report? Councillor Williams.
Thank you. I agree. I think sort of like almost like an expiry date or something. When due date would be very, very helpful there. I just want to, so I'm kind of looking between the different pages. At page 62, which is not that for you, that's going to be 57 probably, investment activity. And then we have page 63, sorry, the paper agenda is slightly different, which is paragraph 37, but the table on the other side. And kind of looking between these, and I appreciate that sort of technically as well, things fall into different boxes and different categories. So you've got a really difficult job of trying to make something accessible but also technically correct. But when I'm looking sort of investment activity, there's still some things that I feel that are sort of missing from the tables, and they do get referred to, I'll say, later on through the report, because it refers, for example, so Ermine Street, if we look at paragraph 14, no reference to Ermine Street, but then if we look at paragraph 18, it says about the blended return of 4.16 and includes Ermine Street in there as well. And also, I'm assuming it comes under property income later on, but we have commercial properties that are providing return. I would class it as an investment activity, and yet I didn't see sort of any real reference to sort of the science park properties and things like that, because I think it goes back to what's been said in the external audit as well. Oversight of those investments is really important. So it might be that that's more appropriate for a standalone item, sort of like an investment plan scrutiny or something. Or is it the potential to sort of bring that in here so we start to see more oversight? Because things like the science park, since the original decision was made, other than sort of a group collective figure, we don't really have a lot to say how individual investments are doing. And I take your point on the blended, but equally, if you're looking at it from a governance point of view, seeing it, line by line is also important to know if we're getting the best from each of the investments. And as I say, we refer to South Cambs Investment Partnership or SKIP in other places. But I appreciate the Balfour Beatty partnership. I think there was sort of talk it was going to be wound up. I'm not sure if it did get wound up or if it's still there and just sort of a bit dormant. But again, clarity on that, even if it is nil, so at least we just know what's happening in those areas. Because I think particularly with LGR coming up, it's going to be a complete reshuffle. People will be on different boundaries and everything like that. Chair, quite a lot of the things that I'm referring back to is because I know I've sat in the meetings on the decisions, but institutional knowledge through LGR will be lost. So I think the documentation of it is really important now.
Thank you. Councillor Sanford, you wanted to clarify something?
Yeah, just to clarify, Ermine Street Housing is the trading name of South Cambs Limited, which is the legal entity, but I agree with Councillor Williams, it would be helpful if the same wording was used. Yeah.
That's my point. We've got
we should have the same
one
wording.
there and not there.
Exactly, for anyone who's not familiar. Yeah, thank you.
Yes, I think picking one or the other probably throughout the report, although I appreciate. I can kind of appreciate why that's taken place. I think I understand your request, Councillor Williams, and I can see why it's been excluded, which I don't think has been deliberate. But I think it's clear in the terms of reference of this committee that we have a responsibility to look at the Treasury management, and we do that. I think investment properties are not, as it stands, part of the terms of reference of this committee, and would be seen differently to this activity, which is around, the council's, what the council's doing in terms of sort of day-to-day borrowing and investing, etc. We can look at whether it would be appropriate to bring investment properties within the scope of this committee, which I think would address your concerns, and I'm happy to take that away and explore whether that would be appropriate.
Thank you, Chair. And I say I raise it in light of the external audits report that says about more governance and more scrutiny around our investment activity. And that's what I was saying. I know sort of on a technical basis, but if you look at page 57, thank God it was 5 pages. I can just quickly do that. The heading is investment activity. So I appreciate for this purpose, we're looking at sort of loans and that sort of that treasury management, because it is that strategy. But I think it's really important, because if not, we're not then actually supporting and getting a few of those boxes ticked that the external auditors are asking us to do. If it means that we have to review our terms of reference, then I'm supportive of that, and I can't see any reason why there would be an issue with that. But yeah, I feel like we're not complying with what the external auditors are requesting us.
Thank you. Sorry, were there any elements of those discussions that you wanted to come in on, Martin?
Just a note under budget monitoring, paragraph 28, we do report on the rental income from our commercial property investments against budget, but I take it in terms of...
If I clarify, that's what I said. I know it refers to property income and from those investments, but what we don't have is the breakdown of how, so one property could really be overperforming and one could be underperforming. By getting it all together, we don't have that detail, is what I was referring to.
Yeah, we'll consider whether there's some way that we can show some more detail there. I imagine there's some commercial sensitivity, but we'll see what we can do in terms of providing the committee with a bit more information. Councillor Leeming.
Thank you, Chair. Mine's just a sort of clarification question. So, in paragraph 14, the investment sort of section, the click investment, the Cambridge Leisure and Ice is putting it 2.142 million, but on the table at the back it's 2.4 on page 66. It's not consistent. The other three are the same, but there's something different about these two figures, and I wondered why. It's different by £250,000.
Yeah, thank you. So I think it's been discussed. I think we need to do some more work on the table where we outline the lending organisation. So the 2.4 was the original loan made for Click after they're making their repayments of principal and interest, but so the current balance outstanding was the 2.1 million.
I think this is also the breakdown, so it wasn't the original, that's the original plus the top up. Originally I think it was 1.8 million, and then we agreed a 500, I'm getting nods, and that's what I mean about sort of seeing how things are progressing is really important, because 2.4 was the total that was lent, but it wasn't the original amount. 1.8 I think was in 2017, and then the extra 500 million was 2018. 500 million, 500,000.
Yeah, worried me there for a minute. Thank you.
Thank you for that clarification. That's really helpful.
Any further comments or questions on this? Thank you. We've been asked to review the Treasury management activity and performance, and we have done so. Thank you. And thank you for the report. Item 7 is the 6-monthly strategic risk report. I believe Kevin Ledger is going to... No?
Apologies, Chair, Kevin's not here today, but Kate is going to be doing it in his absence. Kate Yerbury.
Can Kate Yerbury please present this report? Thank you.
Good morning, members. Thank you for your time. The report should be attached. This is the 6-monthly strategic risk report. These are strategic risks that cover sort of council-wide and further afield. Also, Appendix B is a summary of all of the changes that have happened recently. This report has been reviewed by LT and is reviewed regularly by LT. But if members have any comments, please do say.
Thank you very much, and yes, I did appreciate the changes from the previous version. It's always very welcomed by this committee. Are there any comments or questions on the updated risk register? Councillor Williams.
Just agreement that it's very helpful to have that list, track changes or something that's clear to us of the differences is always very much appreciated. I have 6 points on it, so I was going to do 3 and 3, if that's okay with you, Chair. So page 81 is going to be page 76. I'm looking at SR22, and it's just about, it says failure to deliver housing and maintain 5-year land supply. As those of us that have been on planning committee are aware, the land supply for self-build is very different. While we have a land supply for sort of standard market housing, we don't, and we're significantly below on self-build. And I was just wondering whether some more sort of awareness in here would be required, or perhaps self-build needs its own area, because I wasn't picking up just quite the scale of the problem that we have when it comes to self-build properties. Yet there is a heavy presumption in favour of development and a heavy tilted balance with them at present. Then on the following page, we have SR23 on the local plan, and I completely agree. I mean, we had the Joint Local Plan Advisory Group last night, and to be quite frank, with all the changes, I described it as, building a plan on shifting sand under your feet. But one thing that hasn't seemed to be sort of considered, we've got about the relocation, but not about sort of the new planning policies that are coming through, and the sort of we discussed last night about the inspectorate time. It could take a year for the inspectorate to go through the process, and would that be in time for the new authority. So just wondering if that has been looked at or whether it can be considered in the future. And keeping on this page, SRO2, just thought it was prudent, given recent events on cyber attacks and things, and the airports, etc. Whether we are taking into view that the current world is a very turbulent place. Are we looking at current events and making sure they're considered in there? And just SR42 on the next page, local government reorganisation, as a thank you for making sure that is included, because that wasn't at one point. So thank you for that. So 3 questions and a thank you, Chair.
There we go. I think mostly those are comments to take back to leadership team rather than anything that can be clarified here. But I don't know if there's anything you wanted to pick up on immediately out of that.
No, just to say, as you've said, that we'll raise this with LT and ask them to review your comments accordingly. Thank you very much.
Thank you. Do you want to go through the rest?
Yes, so on page 80, SR10, the shared service governance and delivery, it's sort of in 8 to 6. I'm wondering if that inherits the score in light of what we've got in our external auditors report today, particularly around IT. It says lack of clarity in council involvement in the shared service, and which the first thing is about 3C ICT. Whether we think in light of that report those risk figures are correct, and has the findings of the external auditors or the comments of the external auditors been taken into consideration. Page 81, SR21, failure to deliver infrastructure. It does say about the wastewater treatment plant, which obviously is going to have huge repercussions, particularly for the local plan. It says autumn 2025. I'm just wondering if we've got a month that we might be able to, because I would, autumn, winter. I know there'll be a technical season change, but it does feel a little open. And last, it was, I'll say, just SR01, same comments before around that sort of IT in light of the external auditors report. Thank you, Chair.
Thank you very much. Are there any other comments or questions on this risk register? Councillor Redrup?
Thank you, Chair. It was also on SR10 on page 81. Some of it might just be clarity and me not fully understanding, because it says shared service governance and delivery, but it seems to mostly refer to 3C ICT, and I just wondered if it referred to other shared services as well. And also in SR10, sorry, I've just lost it. I'll come back to, it was 81, wasn't it? Sort of the risk cause description was lack of clarity in councillor involvement in what shared services are expected to deliver and how decisions are taken. And looking at the kind of actions to mitigate, it didn't seem clear to me that the actions to mitigate kind of addressed that description. I wasn't sure that there was anything involved in helping councillors fully understand the governance and how those decisions are taken. So I just wondered if that was something that needed looking at. Thank you.
Thank you. Yes, there don't seem to be any councillors involved in any of those actions, so it's hard to see how the... sorry. Sorry, Liz, would you like to come in?
Yeah, if I may, Chair, on the shared services risk, because I've been leading a piece of work for the last just over a year now on reviewing all of the shared services. So it was a thorough review. We had consultants involved with ICT and with the legal shared service. It was overseen by members from each of the authorities. The lead cabinet member, Councillor Brian Milnes, was one of our members, and Councillor Richard Stobart was also on that body. And we took the renewed partnership agreement to Cabinet in July. So I'm comfortable with the risk level. I think we have done a really thorough review of the shared services, and we have had member oversight. I appreciate it hasn't been a full kind of engagement with all members, but the nature of the shared services does mean that, you know, we are somewhat limited to in that extent. We did, however, take the partnership agreement to Cabinet in July, so I'm comfortable with the the level of risk, and also hopefully have kind of addressed those questions.
Thank you. That's a helpful clarity, and I can see how those actions do kind of address those risks. But I guess the concern would perhaps be sort of councillors outside of the cabinet and outside of those who were perhaps involved in doing the work, if there's some way to engage them on these matters, so that there is a kind of slightly wider kind of sort of appreciation, sort of leading to appropriate scrutiny from kind of outside the cabinet, and whether there's something that could be considered there. I don't need an immediate response to that, but perhaps something to take away. Councillor Williams?
I would just add as well, in light of what our external auditors have said to us today around IT, they were very clear that us as a committee needs to have a good idea and know full sight of what's going on. Appreciate things might become a cabinet decision, but I think we should impress the need to have oversight at this committee, as the external auditors are telling us. That's not us taking on that responsibility ourselves. They've made it very clear in their report and their comments to us today, and I hope that will be taken away.
Thank you. Did you want to come back on any of that, or is that clear enough?
I mean, I think the external auditor's point was that IT is clearly a risk for any organisation now, and as Councillor Williams has pointed out, cyber attacks are a significant concern for all. I think the point about having a shared service, which, as you know, started 10 years ago, is that we have much more capacity to respond to those risks. So we have a senior cyber officer who is working entirely on cyber and security. So I think the nature of the shared service means that we are in a much better position than if we were running our own IT service in some of those sort of substantial areas of risk.
Thank you. That's some helpful clarity there. Councillor Leaming, you wanted to come in.
Thank you, Chair. I think Councillor Williams has addressed one of my points, which was understanding when about in autumn we would get a briefing on the impact of the government's wastewater treatment plan relocation. I think that's really crucial. I think it's also crucial for us within this risk to understand it's not just water, although water is obviously a very pressing topic at the moment. It's also things like electricity, and I would be interested to understand how, for instance, the Cambridge Growth Company are considering wider infrastructure requirements in addition to water. My second point was to do with a new risk that's appeared. It's on page 83 and it's SR 43. I'm pleased to see that AI has made its way onto the risk register. I think that what I would like to understand more is whereabouts within our organisation are we using AI? I understand that some of the transformation teams work, to do with automated responses and things, maybe AI driven, but I think it would be relevant for us as a sort of governance body to fully understand what we're doing with AI, which AI companies we're using, what data they're extracting, what information we're giving back, and just to monitor that, because I mean it's a new thing that the council is doing. Any new arrangement brings risk with it, but I think it would be remiss of us not to keep our eye on that. So I would appreciate if perhaps internal audit could look at this, or if we could have some further evidence about how we're using AI, how we're making the most of it, but also which parts of our organisation is it touching and how is it dealing with our data. Thank you.
Thank you. I think that's a really valuable comment that we can take away. Perhaps Mr. Tully can address that in the next item. Any further comments on the risk register? Thank you. So we've been asked to review the current strategic risk register and the changes, making any comments or suggestions as appropriate, and I think we have done so. Can we move on to item 8, which is the governance risk and control update? Could Jonathan Tully please present this report? Thank you.
Thank you, Chair, and good morning to all members of the committee. We're on page 89 of our agenda packs, hopefully. It's mainly an internal audit update in this report. It includes our normal updates of reviews that we've concluded in the last quarter. Plus, we have an appendix which consolidates our previous quarterly reports and updates presented to the committee. The purpose of that really is to sort of demonstrate how our work supports the annual governance statement and feeds into that. So that's really the purpose of the bigger, longer document. But I do apologise, there'll be some bits in there that you've seen throughout the year, just repeating that. But I'll dive into the important detail. So on page 93 of the pack, we've got our three audits which we've concluded since our last committee meeting. The first one was tenant satisfaction measures for housing revenue accounts. This was a new review that we did last year in response to changing sort of requirements in terms of reporting to the regulator. So it was definitely an area of risk. So we've come in and had a look at it a second time, and it's been very good improvements on last year, and we've been able to give that full assurance. All the data that went back to the regulator was in good order and completed in good time as well. They've taken a proactive approach of rather leaving it to the last minute of doing it throughout the year. So that's all very positive. The second one is a bit of a mouthful. It's the National Register of Refusals, Revocations and Suspensions, which is to do with the licensing. And that was a follow-up review. We undertook some work in that area in response to changes in legislation and best practice. And we had a number of actions which came out of that. So we just go in and periodically do follow-up reviews just to make sure that they've been implemented and working okay. So again, that's been done. Positive to see they took prompt action on those, and we've been able to give that one full assurance too. And then the third and final one there was for Ermine Street Homes itself. We did a review of fire safety compliance about a year and a bit ago. And so again, we've come in to do a follow-up review because it's quite an important area to make sure we're complying with fire safety regulations. And they've implemented all the agreed actions, and they've actually implemented some further controls as well, which mitigate the risks. So again, another good review there. We've been able to increase the assurance from limited assurance up to full assurance there. So we like to provide a sort of real-time report to you so that you get information in a topical way. And our overall assurance on the control opinion of governance of the council and effectiveness of internal controls is reasonable, which is very positive. Other things that we highlight in our update are the audit standards. You might have heard me mention it before, but we've had new sort of global internal audit standards come into place, and then public sector versions of those have recently been issued. So we're continuing to work our way through those and implement them. We're not expected to be fully compliant on day one, but we need to be working towards it. And certainly the committee will see the outputs of some of those things. Most recently you saw and approved our charter, which was done to reflect the terminology of the new standards. The next significant output that we're working on and what you'll see will be our revised strategy document. In terms of team resources, I'd like to give an update there. Following recent transformation, we've introduced 2 posts using apprenticeships. That is dependent upon the Institute of Internal Auditors apprenticeship scheme going live. It's been reviewed. There's been a slight delay to that, and we're now expecting that to go live in the new year, and so we'll recruit into that post once the scheme is up and running. And then Appendix B, this is the full report, and I say for the most part it's summarising information which we've reported to you previously. So I think probably just to try and pull out the main sort of highlights or sort of like changes or things to be aware of, certainly. Trends and insights on page 102, paragraph 3.6. This is a sort of a new requirement from internal audit standards that they're asking us to sort of try and report on trends and insights. And this is trying to think about, are there any consistent themes being reported across the organisation? So an opportunity to really reflect on our work and report back on that. So I completed some analysis on our work, and there's certainly nothing obvious to report apart from the normal pressures that we'd always be aware of, things like legislative changes and things which would have featured in our risk register. But one thing to note is that we're starting to embed root cause analysis in our work. And this will give us another sort of lens to look at our reviews. That might provide a little bit more insight. So we might be able to provide more fuller information in that section in future years. But certainly nothing of concern in this report. Moving on to page 102, section 4, independence and objectivity. This is sort of a new section in that I've reported on it before, but it's a requirement to really be quite clear about this now under the new standards. So I'm reporting there have been no independence issues in the plan for the past year from either me or my team, which is good news. And then we move on to page 105. That's basically a summary of finalised reviews, which you all would have seen before in the previous reports. I think the things which I would just highlight in addition to those really, that in addition to the normal reviews, we undertake sort of what I call embedded assurance, which is where we work proactively with teams throughout the year. So rather than standard audits, there's sort of embedded assurance. And examples of that include proactive counter-fraud checks on grant schemes to try and minimise the risk of fraud and error, and also participation in information governance and risk management groups. And we did speak about information governance earlier on. So we've got a sort of board which meets regularly, and that provides a lot of sort of real-time assurance that ICT controls are sort of working well. That's across the sort of 3 councils. And I think the other things, whilst we're just on that topic, just to highlight, which would be helpful assurance for the committee, in terms of the annual governance statement, when we're thinking about how things get reported to this committee, we reflect upon external sources of assurance, and one thing which features in there is the PSN accreditation, that's Public Services Network, which is where we sort of evaluate our compliance with data handling standards, which is important because that allows us to basically interact with central government and share data. So that's quite a robust accreditation. And also I think the cyber risk, we mentioned that as a risk, just to probably note that that features in our annual governance statement for this year as a recognised risk. So it's very much something that I think that the council is proactively aware of and dealing with. On page 106, we have our sort of current work in progress and forward plan. So we operate an agile risk plan, so things change regularly, and the committee are always welcome to sort of suggest updates. So I note the comment there about artificial intelligence and how it's used at the council. But it's just an opportunity to sort of feature on that. What I would say is that I mentioned earlier on, we're doing a strategy review. We've also just had the recent risk register. That's a good point for me to basically take a stock, and I'll be doing a deeper, fuller review of our strategic plan based on that information. So that will be happening over the next couple of months to make sure that's updated. But thank you for the suggestion about artificial intelligence. And then going on to page 109, just highlights counter-fraud work. We work proactively with colleagues in our counter-fraud team. Our main role is really in internal audit is to coordinate the National Fraud Initiative, and we include some commentary about that. That's a lot of work that goes into it every 2 years in preparation, and we can provide positive assurance around the data quality of all the data that's being supplied. And we're both working with the fraud team on actually investigating the matches which have come back from that at the moment. On page 1110, we have to comment on internal audit standards and compliance. Probably not a lot more to add beyond what I said earlier on, but just please do recognise that we're obviously updating our working practices to take on board the new standards. So probably a lot of changes at the back office, perhaps not so much up front visibly, but yeah, we're certainly going through that, and the big thing is the root cause analysis we're doing at the moment. I would say for us as a team, it's something we've kind of always done, but what we've not done is had a framework to look at it in the round across all the systems. So that's something hopefully will be very informative going forwards. So just coming to the conclusion, the purpose of the report is to really just feedback on and what we've been doing. We've been compliant with the existing standards for this bit of work, and we're now working on the new ones. So hopefully that's useful for all, and also sort of provides that link into the annual governance statement. Okay, thank you.
Thank you very much. Any comments or questions from members today? Councillor Williams.
Thank you. Just on page 111, I see you've got the sort of learning development, which obviously we've asked for. I just want to make sure that we are including external qualifications in that? Because obviously we have certain positions at the council where you need to have a certain professional standard. I'm aware in other authorities what's happened is people, when they've applied for the job, they've got it, for some reason they've then lost their qualification but continued doing that job. So I think that for me is a real area of risk, because it's obviously if they're doing their own CPD for their own professional body, it's not something we're directly necessarily involved in. So checking that that's part of that, and just wondering how you're tackling that sort of challenge.
Yes, it's certainly within the sort of consideration, the scope of what we're looking at for that. There are probably quite a few different ways we can tackle that, whether it's essentially from the sort of HR learning development side or through sample testing with individual teams. So we'll probably tackle it from a couple of different directions at once, I think.
Thank you. I just think it is, particularly skill sets, because if you've got a professional standard, people have breached, lost their qualification for many reasons, and sometimes not legal reasons. And I know that's become an issue for some companies and some local authorities. So if we can make sure that has a priority, I think, not suggesting that anybody is, but from a governance point of view, we need to ensure that people are still able to practice or have their qualifications.
And absolutely noted. I'm not aware of any non-compliance at this stage, but it's a helpful thing to have good control with.
Thank you. Any further comments, questions? Councillor Enderup.
Thank you, Chair. I was looking at page 94 in the Ermine Street Housing Fire Safety Compliance Follow-up. And I guess what raised this was that it said it's coming from the 2022-23 follow-up audit, and then that the action had taken place in April 2025. And I guess it got me thinking about what's a reasonable time frame for these actions, and can we judge that from this report? And I wasn't sure, because I tried looking back to find where this was reported originally, and I wasn't able to find it. And you've given a bit of guidance in this about a year and a bit ago, but I've just tried to look back, and I still haven't been able to find sort of when this was originally reported to the committee, and what level of seriousness the actions were rated as. So I guess it's just to help me, if it was possible to have kind of when this was noted as a problem and what level of seriousness the actions were, just so we can easily judge if that action has taken place in a reasonable time frame. I think that would just be helpful. Thank you.
Absolutely. One, I don't have the exact data in front of me, and I can certainly circulate that round later on. This was an audit, and this is probably quite typical of our reviews. We will rank all our recommendations according to priority. That priority will have a sort of guideline attached to it. If it's something that's really, really important, we'd expect it to be done within a month. Not so important, 6 months, going all the way to 2 years. And where a report is sort of limited, we may well tackle that report immediately if there's some high-level recommendations, and we may, as we did in this case, tackle it over a number of stages. So this audit's had about 3 visits where we looked at it originally, and we made sure that the really important actions had been dealt with quite quickly, which they had. But inevitably there is a sort of number of actions which are more longer term, and that's what we came back and did this sort of final 3rd visit, and then we're able to really sort of conclude on it and say, yes, well done, you've moved all the way from limited up to the full assurance. So I'll come back to you with the specific dates, but I think, it was over a year ago, I think, initially, when we looked at it.
Thank you. Did you have any further questions on that?
No, it was just, possibly just about whether it is useful for the committee to kind of have at least where to look to find some of this information, just so when we're reviewing it, we can check more easily. If you could think about that, I'd appreciate it. Thank you.
A simple idea that's popped in my head, I could probably do a hyperlink in the text back to the initial report, so I'm happy to take that away as a learning point.
Yeah, I think that would be sensible. I mean, I think Councillor Edwards' point is well made, that does seem to be quite on the face of what's presented here, it's obviously quite a lag between some of the initial work and some of these actions being completed. And as you say, those would appear to fall outside of the timelines that you indicated for, high, medium and low priority actions. But yes, I mean, it sounds like you've been very regularly involved with them over the last sort of 3 or 4 years to kind of track this. But having that having sight of that at the committee would be helpful. Thank you. Thanks. Any further comments or questions on this report? No, thank you. We've been asked to note this report, and we have done so. Thank you. Last item on our agenda is matters of topical interest. Do any members or officers have anything they want to raise at this stage? Councillor Williams.
Thank you, Chair. I don't know if everybody has seen that there are potentially going to be proposals for VAT to be put on taxi journeys. Now, that won't impact us for sort of, I'm thinking it's going to impact sort of county more with, if you imagine the car hires and taxis that for children commuting to school, particularly for vulnerable children. But in light of there potentially is going to be changes to VAT on that sort of external view, do we have sort of preparations, or do we have any idea what our sort of exposure potentially could be if there are not just taxi drivers, if there's going to be a change of what's going to be VAT classified, where currently we're not? I know we can sort of claim back on certain things, but have we got an idea how that's going to impact? Obviously, we do licensed taxi drivers, and potentially the financial impact that's going to have. I've raised it here because I appreciate it's a bit niche. It is developing, but I do think there is going to be an impact on a service that we provide as a knock-on effect, and whether that's something that maybe not for this committee, but if we can ask officers to look at what potential impacts that could create.
Sorry, just to be clear, so are you concerned from as the council's role in regulating the taxi industry, or are you concerned in the council's role as a potential purchaser of these services from time to time?
I'm sure we probably do pay for taxis now and then. I think for the purpose of the purchaser, I think that's going to be much more of a council issue. With private hire. For me, it's more the fact we issue the taxi licenses. We get revenue from issuing taxis. There are other burdens on taxi drivers. If this is brought in as well, what's the sort of impact going to be to us if we see a reduction? So it might be that a very small amount of income comes in from taxi licensing. I'm not, we don't get that sort of granular detail, but just want to check that officers are aware of that, because it potentially will have an impact. Might just, some people might just say, we can't afford to do it anymore.
Yeah. No, well, thank you for flagging that. I'm sure officers will take that away and consider what the impact might be. Are there any other matters of topical interest that people want to bring forward? Thank you. That concludes this meeting of the Audit and Corporate Governance Committee. Our next scheduled meeting is the 11th of December, but as I indicated earlier, there will be an additional meeting of the committee, likely to be the 17th or 18th of November, but please keep an eye for communication regarding exact date and time of that meeting. Thank you very much. I close the meeting at 11:33.
Thank